All right, guys, this is John Galt and welcome back to Granite Capital. And as usual, we will continue with our research, with our findings on the candle counts. All right, so this is going to be the video number 3. In the first video, I told you about the various cycles that we see across different time frames. Following the series 1, let me write it here. Series was 1, 4, 7, 13, 21. Some people also include 17, right? And then we had 33. Some people also include 31 and 34, all right? But we mainly focus on these numbers. And in today's video, in today's topic, we are going to be focusing on the number, like 1 is always there, right? 1 is always there. That is where you begin your candle counting. We'll be focusing on 4. We'll be focusing on candle number 13, right? So these are going to be these are going to be the numbers that we will be majorly discussing today. Now we have already discussed candle number 4 in the video number 2. If you guys have not watched that video yet, just look above. You can watch it there. All right. So do go through that video. In that video, I've covered how we caught the bottom for the current Bitcoin move up, 19,600 something, I guess. So I believe that was the level. You will understand how I got that level and how candle counting aided us in taking that decision. All right. So let me get rid of it. And today we are not looking at the crypto chart, but we are looking at the NIFTY chart. Now you will see here Stock Shock. Stock Shock is basically my other channel that is dedicated to the Indian stock market, majorly focusing on the Indian indices. So if you guys are from India or if you trade in the Indian markets, the Indian indices, and if you understand Hindi, right? If you understand Hindi, you can follow that channel as well. That's at Stock Shock. Okay. Even if you just type it in the YouTube search bar, you'll get the channel. So without further ado, let's just go down to understanding what we basically want to discuss. Now, again, I found a very important, not important, but I found a very useful tool here. This, as you guys can see here, that is the SMT divergence. So let me just go here and you will find it here. So this is SMT divergence, TFO, trade for op 1804. Okay. My eyes are gone, man. My eyes are gone. Not even old yet, but no, cannot be helped. And there's thousands of hours sitting in front of the screen, so that is what happens to a man. Anyways, so we were looking at the NIFTY chart here. This is on the 3-minute time frame. Okay, this is on the 3-minute time frame. If you guys go to my first video, you will see that as you move across time frame, these candle counts may change, but then again somehow they always end up in a particular series, particular order, right? So what I did was I used this SMT divergence tool. I mean, I did not need to use it, but I found this tool and I found it to be helpful. So this is what I've been using. So what I did, I connected the SMT divergence for the NIFTY chart. I connected it with Bank Nifty, and the Bank Nifty chart, I connected it with NIFTY, as you guys can see here, right? So what do you see here? Just look at the time. Okay, just look at the time. That's 12:21. See, that's 13:03. All right. And what do we have here? We have this low at, again, 12:21. And where do we have this low at? Not this one, this one. That's 13:03. All right. If I connect this to this, what do I get here? I get what? I get low, a higher low. All right. I get a low and a higher low. But what do I get here? I get, a higher low. And here I get a low and a lower high. And a lower low. Okay, here we have low, higher low. Here what do we have? Low, lower low. That is what? This is SMT with NIFTY on Bank Nifty, and this is SMT on Bank Nifty with NIFTY. And this is the SMT on Nifty with Bank Nifty. All right. So as soon as we get our SMT, what do we understand? This is what? This is smart money technique. And what we are witnessing here is smart money reversal. Okay. Not that. This one here. Right. So let me get rid of these here. These timestamps. This is gone. This is gone. All right. So we got our SMT here. Okay. All right. What else do we have here? We already have our market structure shift here, right? So this trade, the trade that I am talking about, was taken on Nifty. It wasn't taken on Bank Nifty, it was taken on Nifty. So we get this high here. This high creates this low then creates this high. What is this? This is your market structure shift. This is a market structure shift. Then price comes down, creates a higher low. Here, again, even on the Bank Nifty, this low, this high, you get this structure shift here, right? You get a structure shift here. Probably this is the reason I did not take an entry here, because I had already gotten a market structure shift on Nifty, but I did not get the structure shift on Bank Nifty. Why? Because I have not got a candle close above this level with displacement. Okay, I'm not going to go into the depths here, but let's just keep it at that. Then what do? We wait for this low. So this is a higher low, this is a lower low. SMT divergence on Nifty and Bank Nifty. All right. Now, what do we see here? Price creates this low, goes up, right? Price creates this low, goes up. When price goes up, what do we see here? We get our SMT and we get our 3-minute FVG. That's the 3-minute fair value gap. Let me change the template. This is not my FVG template. This is my FVG template. This is the 3-minute FVG, right? 3-minute FVG. Now this is where our candle counting comes in. So what do we see here? This is number 1. This is number 2. This is number 3. And this is number 4. Right? This is number 4. If you go back to the video number 2, what does candle number 4 do? Whenever you see an imbalance, candle number 4 is the candle that balances the imbalance. All right? Or rebalances the imbalance. So let's get rid of this. This is going to become what? This is your candle number 1. Right? 1, 2, 3. And then we have our 4 right here. This is our candle number 4. And this is the candle where we take our entry on the fair value gap. We take an entry on the fair value gap. Again, if you notice something, this candle almost rebalances the entire fair value gap. So this low can act as what? This low can then act as your ITL, that is your intermediate term low. Now, if you want to understand about the ITL, that's advanced market structure, you can refer to ICT 2022 mentorship, right? Episode number 12. Also, you can just go back and watch my, second video on candle counting, and you will get to understand it. Okay, so this is intermediate term low. If price wants to go up, it is not supposed to break this low. Price is not supposed to break this low. All right, so we have this. Now, what does price do? It goes up again. This is candle number 5. This is candle number 6. We generally do not follow the counts of 5 and 6. We go from 1, 4, 7. All right, so what happens here? Price, we take an entry on candle number 4. This is candle number 5. This is candle number 6. And then price starts moving up. So are you getting any sequence here? If you go on the video number 1 again, what do you need to do? You need to find the rhythm. You need to find the rhythm of the counting. All right. So as price went up, what I did was I then again started another sequence from here. All right. So now this is what? This is again my candle number 1. Right? Because again, this is what? This is a swing low. This is a swing low. This is a valid swing low. So what happens here? Now this is my candle number 1. This is candle number 2, candle number 3, candle number 4, 5, 6, 7, 8, 9, 10. Okay. Now let's go back again. 1, 2, 3, 4, 5, 6, 7. Is there anything special or particular about this level? This candle? Nothing at all. All right. 7, 8, 9, 10, 11, 12. And then we have this candle 13. All right. Now we have this candle 13 here, which was what? This was our, not the entry, sorry about that. This was our exit point. Candle number 13 was our exit point. So what do we see on candle number 4? We generally see candle number 4 rebalancing the imbalance. All right. And on candle number 13, what you will see, or what you might see, is the creation of a swing high. It can be a long-term swing high. All right. It can be a long-term swing high, which is or might be taking an external liquidity, or going to a very particular internal liquidity, taking the liquidity and then taking a pullback or retracement. So generally after candle number 13, you can expect a nice retracement, because that candle's high, there is high chance that that candle's high will be creating a swing high. Okay. And then you can see a big retracement. So if you have already taken an entry on candle number, either candle number 4 or candle number 7, candle number 7 is generally related to retracements, right? Candle number 7 is generally related to retracements. Candle number 4 is generally related to the balancing or rebalancing of the fair value gaps or the imbalances. And candle number 13, generally the creation of a swing high. So you can take your profits there. Okay, you can take your profits there. So now let me go back in the charts a little. Okay, do you see these highs here? What are these? These are the relative equal highs. If I expand these highs here, what do I see? Let's have a look. See, candle number 13 is the high of the candle number 13 is the high that takes the liquidity of these equal highs, right? It takes the liquidity of these equal highs. So I hope everything is now clear in the picture. How was the trade setup? This was your trade setup, right? This was your trade setup from here to here. Okay. So what did we see? We saw the SMT on Nifty and Bank Nifty. They are supposed to be directly related to each other, not inversely. We saw the SMT divergence, right? We saw the creation of a fair value gap because of displacement. We took an entry on candle number 4 because that is the candle that rebalances the imbalance. And then we waited for this swing high on the candle number 13, where we took an exit. Also, you will notice that that candle takes these equal highs, the liquidity above those equal highs. Okay. So the candle number 4 and 13 also done. So our major focus on this video was for these two candles. Okay. Also, if you notice something, I think I noticed this after the move was already done, because I was done here, right? So I think I started my sequence again from this high. The 13 candle, if you take this 13 candle swing high as the candle number 1 for the next sequence, I think we got something like this. This is candle number 1. Candle number 1. This is what? This is a distortion. There's an inside candle. Inside candles are treated as distortion, so this won't count. Candle number 2. Again distortion. Candle number 3. Distortion. Candle number 4. Distortion. Candle number 5, 6, and what do we have here, guys? What do we have here? We have candle number 7. This is your retracement. Okay, so the major focus of this video was not even on the candle number 7, but you can see how this thing holds. Retracement into what? Retracement into this order block, right? That is your 3-minute order block. Price comes down here. You could then again, if you fail to take an entry here, you could have waited for this retracement on the 3-minute time frame. Candle number 7 enters inside what? Enters inside your order block. Or you could have even taken the mean threshold of this order block. As soon as price reaches here, you already know this is candle number 7. You take an entry. I did not take this trade, but I'm just stating how you could have taken a trade here. So you could have taken a trade here. This would have been a stop loss, and you could have targeted either this swing high or this fair value gap, right? That again could have been, oh damn, that could have been an 11-hour trade. This one was an 8.3-hour trade. This could have been an 11.2-hour trade. So pretty good, right? Pretty good. So I hope again I've been able to provide some more information, some more light into how these counts actually work in the market. Again, I am not saying, I will never say that you can just use these counts alone to take your trades, right? Do not simply rely on these counts. Understand how these counts, they intertwine with the PD arrays that ICT has blessed us with, right? Understand the nature of the market, understand the flow of price, understand liquidity, know how to use your PD arrays, and then apply the concept of these candle counts, and I'm pretty sure you guys will be able to get, you know, some very interesting results. Okay, so that is all I wanted to discuss for this video. I hope this has been helpful to you guys, and you know, I would love to know how you guys are researching on this topic, how you guys are working with the candle counts. And you can just join my Telegram group, you can join my Telegram channel as well, and yeah, you guys can post your charts there as well. So I believe we can create a good community where a lot of people, they are researching these topics, and I'm sure you guys can, you know, learn together, right? So that is all I wanted to cover for this video. I will see you guys again in the next one. Till then, take care. And yeah, don't forget to follow me on Twitter. All right. So I will see you guys in the next video. Till then, take care. Cheers.